Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD for Friday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. My dear friends, this is the 1 hour chart of gold in front of us, and we can see the gold is standing at 2164. It was an important day yesterday because of long list of events, and we all were hoping for some big moves in the market. But sadly, because of the mixed data, there was no proper response. I had a sell stop, buy stop, but when I saw that after the news market only dropped by 20 pips, I got the confirmation that this market is going to be dicey. So I immediately removed my positions, and we can see that we do not have any clarity as a day trader. Okay, as a day trader, we don't have much clarity regarding the direction of the market. So before I proceed with the video, let me mention very clearly that number of trading opportunities are very limited. So if you have any important work to do, you can skip trading for a day, wait for the market to close, and you can hope for a better week by from Monday onwards. But today, okay, if you don't want to trade, okay, you are most welcome, because this is not the ideal market condition. Okay, so let's discuss one by one. First of all, let's look at the market sentiment. US dollar rises as strong data pulls back rate cuts are forecast this year. Dollar advances as US inflation data weighs on rates outlook. Gold on track for weekly drop as traders temper US rate cut hopes. This is the ongoing market sentiment. If you try to understand the market sentiment and try to execute your positions accordingly, then you will be messed up. Because okay, from a general understanding or point of view, okay, it is difficult to understand the market, okay, right now. So let's stick to our level to level trading only. Okay, so first of all, let's have a look at the chart of US dollar index. And my dear friends, finally we can see some sort of relief, some sort of recovery on the chart of DXY. And we have been discussing about DXY's important resistance around 103. And as I told you guys, that to continue the upside, DXY will have to cross 103.30. And finally, we can see that DXY has formed a higher high. So this is a good sign for US dollar lovers. So market is standing at 100 moving average, you can see right now, and market coming down for retracement. Okay, should not be a big surprise, because obviously market will be going up like this if it wants to go. So the next support on the chart of dollar index is 103, or around 103, 103.10. So if you see market taking support and going up again, it will be a confirmation that okay, after retracement, dollar index is taking support and going up, and you can expect that in the coming days there may be some upside. But again, I'm repeating, the weekly closing is going to be very important, because technically, okay, we can see a different story on the chart of gold. Why? To understand it, we need to look at the daily time frame, and this is the daily chart of gold in front of us. And we can clearly see that after the big move, okay, market has formed a bullish flag here. Bullish flag is a powerful pattern because it follows the trend of the market. So technically we can see that market is getting ready for a big breakout. And this time, if a breakout comes, then obviously market will break 2200 and market will move towards 2250, 2300 level. So things are very confusing right now, because dollar index is going up but DXY is not going down at the same time, my dear friends. And we can also see a bullish flag. Okay, so as we all know, my dear friends, okay, consolidation is very important. So maybe by next week the bull flag may go up. If that happens, be careful. Sellers, be careful, try to exit immediately, and buyers, enjoy the ride. That's all. Okay, but as of now, market is still inside the flag. Okay, let me be very clear, market is still inside the flag. And as long as market is inside the flag, okay, you should not trade, because the flag is also known as no trading zone. Probably you have heard that as long as market is inside the flag, market is inside consolidation, this is your no trading zone. And when market breaks the flag, then only you should go for a buy. But in this case, you can go for a buy above 2200 for safety purposes, and this is a good trade for swing traders. Okay, now let's look at the trading opportunities for day traders. Okay, now we are back to our 1 hour time frame. Okay, so let's discuss one by one. First of all, let's talk about the black line here. Okay, the black line is the next strong support where we can expect the market to bounce. And to derive this line, we have used FIBO. Okay, and we can see the next line is around 2115 to 20. This is the next support on the chart of gold, and we have FIBO 38.2% retracement level. Along with that, we have the previous resistance acting as support. So in case market surprises us, because Friday evenings can be dangerous. Probably you have heard me, or no, probably you have heard saying me that Monday mornings and Friday evenings are dangerous. Okay, so in case market surprises us with a big selling pressure, and obviously the flag pattern will be no longer valid then, and if that happens, day traders or scalpers, you can look for a buy around this area, because we have FIBO 38.2% retracement level. Along with that, okay, previous resistance will be working as support. Okay, so 2115 to 21120. But before that, okay, this level is far away. Okay, so before that, you can also expect some support around 2130 area as well. Here we are using previous support acting as pure price action, nothing else. 2130. So it depends on the volume and volatility of the market. If you see market coming down with big red candles, this may not work. In that case, keep your hopes on this line, 2130 to 11520. Okay, now let's talk about our support of 2150 to 2145. Especially during the Asian session and European session, you can expect the market to take support around this area. Earlier market has shown that market is respecting this support. Earlier market has shown the presence of buyers around this area. Okay, but here we can also see the structure of the market is not very positive. So if that's the case, okay, if that's the case, next time market will break 2150 to 2145 and will be heading down. Okay, see, one level but two trading opportunities. So it all depends on the volume and your observation. So 2150 2145, when it will work, if you see the market is coming down but there is not much selling pressure, then you can expect the market to take support. That's why I'm saying that during the Asian session and European session, when we do not have much volume, we can expect the support to work. But in US session, usually we see craziness in the market, we see heavy volume. During US session, if you see the market is standing at the support with a big red candle, do you think it will work? Obviously no. In that case, do not go for buy or sell anything. And if risk is your middle name, you are a risk lover, you can also go for a sell below 45 2145 as well. But beginners, new traders, do not go for this. But if your risk management is good, then only you can go for a sell below 2145. So 2150 2145 is going to be a very important level for the traders. Okay, now we are on the 15 minutes time frame. So the three levels that we discuss are more or less good ones. For 2115 2120 is the best level. 2130 is also a good level if the selling pressure is not very high. 2150 2145 is little bit dicey level, but yes, you can definitely expect it to work as support during Asian and European session. US session, time will tell. Now the market is slow, trading opportunities are very less. So in this market condition, where we can look for buy then, my dear friends? Okay, I am on a 15 minutes time frame. You must be knowing that higher time frame, high reliability, lower time frame, low reliability. But sometimes the market is so slow that we are forced to look for trading opportunities on lower time frame. So in this case, okay, we have 2157. Okay, 2157 to 2158, and then 2169 to 2170. These are the two levels from 50 minutes time frame where we can look for a buy and sell. And how much you can expect? This is a 50 minutes time frame. Do not expect huge trade, but as a day trader or scalper, at least you can expect 20 pips. Okay, if you are planning to score some quick pips, yes, you can look for a sell around 2169 2170 or 2157 2158 area. Okay, if market, okay, if you see market is coming down and going up from here, you can look for a buy. If you see market reversing from 2169 2170, you can go for a sell. On the 15 minutes time frame, Okay, and one thing I would like to mention again, these are levels on the lower time frame. One big candle will be breaking these levels. The levels will be shattered. So do not look for these trades on US session. US session will be volatile because we also have a news coming up. So be careful. Okay, be careful at a time of news. And if market shows extreme volatility, market shows a trend, try to follow the trend of the market instead of reversals. So whatever I have discussed right now, the levels are not very strong. Okay, but day traders, you can look for some buy and sell accordingly, but yes, your risk management should be proper. Why the levels are not strong? Because on the daily time frame we saw that market is under consolidation. Okay, so let's wait and watch. That's all from my side, my dear friends. Thank you so much. Bye bye, take care, and see ya tomorrow. Okay, let's hope for a better weekly closing so that we can score some big profits by next week.